please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, we have Ashwani Gujral with us to discuss the technicals of the market like he does always at 11:30 a.m. Ashwani, hi, over to you then. So for the Nifty consolidating around 10,900, what's your sense and strategy?
The sense is that last week was a huge trend week. So, often the succeeding time frame is a consolidation. So this week you could consolidate the gains of the last week, and plus you are heading into an event. So unlikely that gains similar to last week could get repeated. But several sideways sessions are likely. But on declines, the idea should be to buy into the market rather than sell. Wait for a down day or some sort of an intraday plunge, which will allow you that opportunity. As far as individual stocks are concerned, Adani Power is a sell with a stop of 39, target of 33. BPCL is a sell with a stop of 471, target of 450. And United Spirits is a buy with a stop of 3780, target of 3950.
Ashwani, grew with this plunge today. Is it coming to any important levels?
See, what goes up comes down. That's, a law Newton gave us many years ago. So chances are that it's a correction because the rally was much, much stronger. So I would think that this is giving sort of an opportunity to people who want to buy. Maybe another day of downside. But I would think around 600, if you get it, you should try to buy it at least once and see what happens.
Okay, well, Ashwani had mentioned United Spirits. Just want to point out that the numbers are coming out tomorrow for United Spirits, and the revenue is expected to be flat, but the kind of margin improvement that they've been showing in the previous quarters, for example, last quarter, is expected to continue on a year-on-year basis, and that is expected to percolate down into the profit. So margins should come in anywhere, could come in anywhere between around 13 to 14%, and that's probably one of the key expectations from the numbers this time round. But Ashwani, let's get in some Twitter queries then. We have Dave, he has 275 shares of Equitas at 157, wants to know whether he should hold or sell that stock.
First on United Spirits, since people expect us to be astrologers, the numbers will be great on United Spirits. This I am telling you right now, 24 hours before that, because the positioning of the market shows that people expect the numbers to be extremely good. Having said that, Equitas is not doing anything. So my problem with stocks like that is that they are wasting your time, and others who are long will finally, tend to give up their positions, and that itself will, make you get losses. So move into another NBFC like India Bulls Housing, which is corrected quite well, which is moving higher. So it may be a better switch.
All right, we have another one. PK Gopi has 650 shares of Hindustan Zinc, which he paid 310 rupees a share for. He wants to know whether he should hold or sell, and he's got a long-term view in mind. Ashwani.
See, long-term, maybe the metal rally has more to go. But if you see since August, the stock has done nothing. Basically, 285, 330. I would think it's even underperformed the metal space. So your final stop is somewhere below 280. If it hits that, you have to take your losses, because the way it's acting, it's likely to get there. That's the 200-day moving average. So that's your risk management. But if we are able to get past 330, then, possibly the rally could resume again. It's been sideways for the better part of last year. So something will happen. Either the sideways will break out or break down. What you should do is just keep a stop around 275, 280.
Okay, all right, fair enough, Ashwani. We're going to let you go on that note. Thanks very much for joining in, taking us through those strategies. For the markets, we're absolutely flat, but a lot of stocks buzzing around. So Dishman Pharmaceuticals from the broader markets is up around 7-odd%. Not that much in terms of volumes, but at least in terms of price action is showing some momentum. Mindtree, another 5% higher on that stock. Good going, up around 20-odd% just in this month. Well, one company in focus is Panacea Biotech. The company has collaborated with Serum Institute of India for a new vaccine for infants. To discuss this, we have Rajesh Jain, the joint MD of the company, joining in to discuss exactly what this means for Panacea as well as for Serum Institute. Mr. Jain, hi, thanks very much for joining in. So it's hexavalent vaccine which you've tied up with Serum for. I think it's your one of your most prominent ones, if I'm not mistaken. Can you just start by telling us what this means in terms of the key factors that go into this collaboration?
Yeah, good morning. First of all, thank you very much for inviting me to your channel this morning. This is a very important collaboration between two Indian companies and probably the largest in terms of potential value, which will address the immunization needs of the developing countries, including India, where the birth cohort is close to 121 million children. It's a huge impact that this vaccine, which is hexavalent vaccine, we call it EZ6 in India. We introduced this vaccine in India somewhere around March 2017, and it has been taken up very promptly by the pediatricians in India. And we are this collaboration actually is now going to take this to more than 100 countries worldwide, in which both companies will manufacture this vaccine and supply to UN agencies, largely national governments of India as well as in the developing countries. Overall, what we see is a potential of more than 250 million doses of this vaccine annually, with a potential of over $1 billion. And in this collaboration, we are looking forward to Serum Institute of India leading the role by supplying us the IPV component in it. And they are currently scaling up their capacities to meet this challenge of more than 250 million doses need annually.
Okay, Mr. Jain, can you take us through what it means in terms of the financials for Panacea? Because with this collaboration, I'm sure there would be a revenue and profit share as well. So what is the proportion of that?
Okay, I think what we are looking at largely is both companies have a capacity to supply this vaccine globally. And depending upon which countries finally take up this directly or through UN agencies, we will be segregating that revenue line as we move closer to the market in terms of collaboration. So all these operative, tactical things will be decided in the next 2 years. That is the time when this vaccine will be at its peak in terms of the production and supply.
And how many other
in the next 2 years, Panacea Biotech.
How many other companies are probably selling the same?
Sorry, can you say that?
How many other companies are probably selling the same vaccine currently globally? So, for example, what would your competition be?
This is an innovative product from Panacea Biotech, so we are not expecting any competition from other companies in the space. And we are, in terms of the introduction, far ahead of our potential competition in a number of years. So we don't expect any competition, although we welcome competition, but we don't expect that to happen in the coming years.
Okay, and Mr. Jain, quickly then, can we expect maybe an extension of this collaboration between Serum as well as Panacea, considering that both of you all are pretty much in the same business of vaccines? It could be anything, more vaccines that you could collaborate with, maybe something more in terms of, say, a financial tie-up.
Actually, both the companies are very, we know each other for almost a decade or maybe more than that. We have had an active relationship, and we keep meeting each other to explore how we can create value. Actually, this relationship is all about creating additional value, not what both the companies are doing. So I believe that as we move forward, Panacea being an innovative company, we are innovating all the time. So there is a huge potential of both the companies also doing some good work in the coming years.
Okay, fair enough, Mr. Jain. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Panacea Biotech, the stock up around 3.5 to 4 odd. Tie up with Serum Institute, which is not a listed company, but one of the largest vaccine manufacturers of the world.
I mean, the market's right there. We've got about a 10-odd point change higher on the Nifty, 10,905. Gaurav Mehta is fund manager at Ambit Asset Management. He's joining us right now on the show. Gaurav, good morning. Good to have you with us here. In your sort of expectation, will the market go in the current form into the budget on the 1st of February? Or you expect to see some nervousness going into the event on account of things like taxing long-term capital gains on stocks, etc.?
Right. So, clearly last 2-3 weeks has been a bit of a frenzy on your frontline indices, with the Nifty and the Sensex continuing to inch higher almost every day. But if you look at the broader markets per se, the broader markets are not really participating to the extent that the frontline indices are. So from that point of view, you have seen a significant deterioration in market breadth over the last 2-3 weeks. So most of your mid cap and small cap, even at the indices level as well as at individual stock levels, these stocks are have corrected quite a bit over the last 2-3 weeks. But the same obviously is not getting reflected in the headline indices. So net, the market breadth has become a bit too narrow over the last few days, and never is a good sign for continued market progress. And that said, obviously budget when it comes along in about
11 points on the Nifty. We were in conversation with Gaurav Mehta, fund manager at Ambit Asset Management, and we got cut off on account of a poor line. Gaurav, please complete that point. My question was whether the market has already discounted any fears of long-term capital gains taxation, and you were telling us that market breadth has deteriorated over the last 2-3 weeks, never a good sign for bulls. Go on.
Right. Yeah, exactly. That was my point, that over the last few days, even as Nifty and Sensex have continued to hit new highs, the broader market is not participating. In fact, several stocks from the mid cap and the small cap, and especially both those, the small cap index and the cap index, both of them have been while the markets have, while the Nifty and the Sensex have been rising. So this sort of deterioration in breadth, the market is led by only a select few large cap stocks, is never a good sign for continued up move. And then you have something as important as the budget coming up in less than 2 weeks from now. So I won't be surprised if you do see a bit of
Okay, Gaurav, we're still facing that problem in terms of the audio, so we're just going to try and convert this into a phone interview just to save some time. But nonetheless, before that, let's just quickly touch upon what's happening with the markets. Nothing really, except for the fact that we've turned into the green. Let's see whether we manage to build on the kind of consolidation that we're seeing for the Nifty in terms of the incremental levels. For the Nifty, we're currently at around 10,900, and for the mid-cap index also nothing much really happening at this point in time. We're just higher by around 0.13%. So, par for course, considering the kind of runs that we've seen for the market in any case. If you're talking about specific stocks, there are a lot of broader market stocks which are just about running away today. So Jubilant Food, look at that one. It's now around 2,200 rupees for that stock. It's up around 6% huge volumes being traded. It's like almost a consensus sort of wave of brokerage upgrades which have come through post the numbers that came out on Friday. And we have DCM Shriram. We were talking to the management, that stock quite active as well, up around 6.8% for DCM Shriram. We have Gaurav back with us. Gaurav, one of the stocks which have really stood out post numbers is Mindtree. What's your sense in terms of what could happen for mid-cap as well as frontline IT? There is a sense that maybe 2018 could be a year for them.
Yes, so meanwhile, I'm not allowed to speak on individual names. Clearly, IT is a sector that has been, under the hammer for the last 2 years, a bit because of some structural disruptions, but a lot also because of cyclical factors like a weakening global discretionary demand. And now, apart from the support of good valuations, what you're also seeing is that the global economy is recovering. Especially, there is strong signs of recovery in the US and Europe. So that clearly should mean that there is at least a cyclical recovery for Indian IT companies, and that in addition to the attractive valuations mean that several of these companies, they've already started running over the last month or so. But clearly, we do think that there is more steam for this sector in general, and in particular, for this sector in particular, and in general, we are positive on most export-oriented stories in the country. IT is one of them, but even frontline and mid-cap pharma, some of the specialty chemical companies, some of light industrial exports that sort of benefit from a global recovery. I think that's the entire basket that we think should benefit going forward.
So just to talk about the specific issue of tax on long-term gains on account of stocks, Gaurav, in your conversation with people and your own sense, where does this issue sit now in terms of probability of this coming? How okay are fund managers, etc., with this as a proposal if it were to actually be a part of the budget? Just your sense.
See, I mean, I'm no expert on these issues, but clearly, the STT was brought in because there was no long-term capital gains. So if there is a long-term capital gains, what happens to STT is something that obviously the policymakers will be deliberating. And net-net, what would be the benefit of such a move is obviously something that will be, a point of discussion. And more importantly, if you continuously sort of try to sort of change tax laws in a country, clearly that's something that from a long-term decision-making point of view doesn't go down that well with investors. But broadly speaking, our sense is that irrespective of whether it's a long-term capital gains that introduced, or for that matter, there is a section in the market that believes that perhaps the one-year exemption for long-term capital gains might be moved to a little higher, something like 2 years. So, it's all speculative at the moment, but irrespective of what happens, I think tax is one of the various elements of the total returns that an investor generates. What happens to the underlying asset class itself is obviously the more important driver. And to the extent that Indian savers still are underinvested, in financial assets in general, and within financial assets in equities, both with respect to global standards as well as with respect to other emerging markets as well. So clearly, that sort of allocation towards equities on a structural basis from domestic savers will continue, and that will continue in our view irrespective of what happens with respect to either the holding horizon for long-term exemption or whether there is a long-term capital gains that introduced altogether.
All right, Gaurav, thanks very much for that. We're going to wrap up this show here. Thank you very much for staying with us. From Ekta, me and the team, thank you very much for watching. The market still got about 10, 11 points on it, 10,903. So it's kind of steady state. Advanced decline is almost exactly the same on both sides. 1,052 stocks on the NSE higher, 1,005 stocks